What's up everybody, welcome to the Stocks channel. My name is Cory, and in tonight's episode we're going to do another stock market technical analysis update, and we're going to start out by looking at the ticker symbol SPY, which is the S&P 500 ETF. Before we get into it, don't forget to smash that like button, and if you're interested in keeping up with our technical analysis updates, go ahead and subscribe to the channel and turn on that notification bell. We do these updates every single week. Now let's crack open these charts and see what's going on in the stock market today. Alright, so just as expected, we had another bullish momentum day, and as you can tell from this chart, we opened up yet another gap below us. So I keep on saying this market loves gaps, and we don't see any change in the market today with another gap up. We see the S&P 500 SPY ETF breaking back into our trend line, which is another bullish indication that the price wants to go higher. However, if we go back to the original crash date of February 21st, we remember this large gap that we've been waiting to have it closed, and today it closed, and the resistance level on that is a $332 level, which we closed at right around that resistance level today, which can be shown here. So the one thing we're waiting to see is this resistance level going to be the end of this run, or is it just the beginning of another run that'll bring us to new all-time highs? So if we get a close above $332.50, I don't see any other resistance until we get up to this $338 level, which is the previous all-time high that we had before the crash. So right now, the strongest level of resistance is the close of this gap right around this $332 level. But if we get one more bullish day and we close above that, the price really has no resistance between $332.50 all the way up to $338.50. So that would be about a $6 jump, and I would expect that jump to happen very quickly with a close above 332. So keep an eye on this resistance level at 332, because it would be a quick run to 338 if we get a close above that. Now going back to our Fibonacci extension levels, if we do get a break above 332, we're likely to see the price reach this 1x Fibonacci to complete wave 5 around this $341 level. Now there is the resistance of 338 on the way there, but that is likely going to be where the price is trying to get to if we get a close above this resistance level at 332. Now there is one thing that concerns me, and it's the fact that we have these two gaps below us, which the market really likes to close gaps. So the fact that we have two gaps in only 3 days of trading tells me that there's an increasing probability that we'll head lower and close these gaps before we get the bounce to take out this resistance level and ultimately go up to test $338. Now these gaps can stay open, there's no guarantee they have to close in any amount of time. However, I just think there's a higher probability chance that we see these gaps close sooner rather than later. Now to show that point, if we jump over here to the 1 hour chart, you can see that this market is gapping up in a very sizable way in only a matter of days. Now if we zoom out a little bit, we see the market was doing this before, and these gaps were closing very quickly. So I don't think this will be any different this time around. We do have these big bullish gap ups, but I don't think these gaps will remain open for very long. I could see these gaps closing by the end of the week very easily. However, none of that matters if the bullish momentum continues, which we still see a very strong upward trend right here with the 5 EMA breaking farther and farther above the 13 EMA. And it's also worth noting that the price closed about 9% above the 200 simple moving average today, which is another bullish indication that the price is really starting to rip higher, and we're starting to see some very large price movements to the upside. So this market is still extremely bullish with these strong momentum uptrends, and we really don't expect to see any weakness in this market until we see the 5 EMA start to roll over and head down below the 13 EMA. So right now we're still very bullish on this market, and even if these gaps close, I don't expect the market to start heading lower. I just expect these gaps to close and act as support, and the market to continue to break away and chip away at this resistance level until it can ultimately go back up and test the previous all-time high. Now let's jump over to the Nasdaq 100, which is the triple Qs, and we see here that there's still another gap below the Qs as well. Now the Nasdaq 100 is pushing up in an area where we've had no previous resistance, so there's really no reason to believe that the Nasdaq 100 is at any amount of resistance levels right now. We do have these Fibonacci extension levels, which we're now pushing out above the 1.272, which is increasing the probability chance that we'll go up and test this 1.618 Fibonacci level, which is way up here at $280. Now, if the whole entire market starts to sell off, I wouldn't expect tech to continue this run up and close this upper price target. However, tech still has time to come down and close this lower gap and cool off a little bit before making another run up to that $280 level. Now, it's going to take a lot of bullish sentiment to get way up there at 280, but right now in this market with these 5 EMA breaking out above the 13 with such a strong separation, there's no reason to believe that this momentum is going anywhere anytime soon, and there's still a very strong upward bull trend on the Nasdaq 100 right now. You can also see here this blue line, which is representing the Bollinger Bands. We see the Nasdaq 100 just walking up the upper Bollinger Band, which is another sign of bullish price action. Now, keep in mind, the market likes to take the stairs up and the elevator down, so this price action could get bearish very quickly, but there's no indication right now that there is a bearish market coming. I would not be surprised to see a sharp correction to the downside to close this gap before heading ultimately higher to new all-time highs yet again. Alright, let's jump over to the VIX, which is our fear indicator, and if you remember from our last night video, we said we're still waiting to see how this trend is going to end and see if we get a close below 23.5, and today we did. We got a close right here at 23. Now, this is another bullish sign because we see fear is exiting the market and we see the VIX is continuing to decline and a nice downward trend here. So if you remember, we want to see the VIX go lower if we expect the market to go higher, and that's exactly what we're seeing. So back in the original crash, we had the VIX gap up and it went from 18 to 22 in just a matter of a day. So we have this gap here on the VIX, and I expect to see the VIX continue to go down to this $18 level while the markets continue higher. Now, any spike of the VIX to go back above this 23.5 level would be an early indication that volatility is not yet ready to leave this market, and we could still see some price action correct to the downside. But right now, all signs point to bullish, and there's no reason to believe otherwise at this point. Jumping over to the financials, we see the financials are pushing up and finally doing something today. They had a nice gap up in the morning, and they closed right up here at our upper resistance trend line. So this is great to see financials finally starting to have some price action move and maybe possibly break to the upside, and we would like to see financials break to a new high. Ultimately though, the financials are still very bearish, having all lower highs and still trading well below the 200 moving average. However, we're still waiting to see some sign of life in the financials, and I think we're starting to see it now. So if financials can break out above this $24.5 level and start breaking up here to test the 200 simple moving average, we can start to get some confirmation that this market is the real deal bull rally and it's not just a few sectors carrying the entire S&P 500. Now let's jump over to the industrials, and we see another bullish sign. We see a gap up in the morning and a giant bullish candle, which is a great sign. If you're a bull, you want to see these large green candles, which says that there's a lot of buyers and not a lot of sellers, so the price is just driving higher and higher. Now, another good thing to see on the industrials if you're a bull is we got a solid close above the 200 simple moving average today. This is all very bullish indications because we saw the 200 simple moving average was acting as resistance. So to see a nice gap up and a nice close above all of these resistance levels tells us that this move up to the upper side is the real deal, and we're starting to see the confirmations in these other sectors. So financials are close to confirming a breakout, and I think we now have a confirmation breakout on the industrials, which tells us the S&P 500 is likely to see new all-time highs because all of the sectors are moving to the same direction, which is the bullish upward trend that we're seeing everywhere. So keep in mind, when you see a strong bullish trend like this, any correction to close these gaps is an obvious buying opportunity because we expect these gaps to act as resistance, and we would expect to see the bullish trend continue after support is found. Jumping over to the healthcare industry, we see another sign of strength. We see the healthcare still holding up above our support trend line, and we see the 5 EMA is still well above the 13. Now, we're only a day or two away from the healthcare industry popping off the support level and possibly breaking to new highs, which again would confirm all sectors are aligning to the bull case, and we're seeing strongward upward momentum everywhere, which is exactly what we want to see. If we're a bull on this market, we want to see all of the sectors moving together. A quick update on the US dollar. We had another close right around the same level we saw before, so we may have found the bottom on the dollar right around this $92.50 level. So we'll continue to watch the US dollar, and we're still waiting to see some strength return to the dollar if we're going to expect any correction in asset prices. But right now the dollar looks extremely weak, and there's no reason to believe that this downtrend is over just just yet. We still need to see a break to the upside and a break above this resistance level around $94, and that will tell us that the dollar possibly found a bottom, but right now we don't see a bottom in for the dollar just yet. And since we talked about Apple last night, we'll talk about it again and give an update here. We still see these huge gaps below, and we see the green candles are still very small, and we're starting to see Apple sort of find a top and kind of take a second to cool off. I still think it's very likely that Apple needs to cool off and close these gaps before ultimately heading higher, and as it's approaching its $2 trillion market cap, we see a lot of strength and possibly FOMO entering into Apple. So if you're a bull on Apple, you might want to wait for a nice healthy pullback before adding to your position. With the bull run that Apple's had, I think it's very likely to see a very healthy correction, and that will come very soon. With the size of these gaps, I would expect these gaps to close in a relatively short amount of time. So going back to the S&P 500, just a reminder, this market is extremely bullish, and we're starting to get confirmation on the VIX and the other sectors. So I would expect to see any dips being bought up like crazy in this market, and eventually we'll see these gaps close and a break to the upside to ultimately test the previous all-time high at $338. So you're waiting for a close above 332 to confirm the test of 338, and any dip buying would happen at these levels of $330 for the first gap and $327 for the second gap. Now if you remember, $327 was also a strong resistance, so we could also go ahead and move up this support level to be right around this $327 level where we saw the market acting previously as resistance. We would now expect that market to hold up at that level as support, which goes hand in hand with where that gap was opened. So any pullback into the $327 level, I think we'll see a nice bounce and a retest of 332, and ultimately we're looking for a test at this $338 level and break to new all-time highs. So we'll continually monitor these sectors. Don't forget to like this video and subscribe to the channel to keep up with our technical analysis. Thanks for watching, and I will see you all in the next episode.